Namaste. Welcome all of you. This is your 25th lecture in the series of online lectures and you are learning bookkeeping and accountancy standard 12th. See, this is my usual advice to you that you have already watched my earlier lecture, that is lecture number 24, especially before attending this lecture. Why? Because learning is a step-by-step process and you won't be able to understand the new concepts unless and until you have learned the earlier concepts. So this is just suggested for your better understanding. We are learning bookkeeping and accountancy standard 12th of Maharashtra board, HSC board. And currently we are learning lesson number 1, that is introduction to partnership and partnership final accounts. And we have reached to last illustration, that is illustration number 10. Okay, with this our illustrations will finish. And only one practical problem has been remained, that is practical problem number 10. With completion of that practical problem in our next lecture, our first lesson will complete. So far we have completed all these competency statements which has been stated by board. Okay, and currently we are on the last competency statement, that is to how to find out the financial results of the business, that is how to find out the trading account, profit and loss account and balance sheet. That is called as the financial results of the business, of the partnership business. See, these are the different methods of maintaining the capital accounts of the partners when the business is partnership business. Okay, either by fixed capital method or by fluctuating capital method. See, these are the important adjustments which I always stress upon, that you should be always familiar and very good with all these adjustments. For example, these are the adjustments related to profit and loss account. Okay, because these are regarding bad debts, RDD, discount and reserve for discount on debtors and creditors. Apart from these adjustments, some other adjustments which are related to balance sheet are regarding bills receivable, bills payable, bad debts, RDD and discount and reserve for discount on debtors and creditors. Okay, so all these adjustments must be very clear for you. Then only your base would be very good for doing solving all the problems. See, what did we learn in our last lecture? We have solved practical problem number 9, that was of Sun and Moon of partnership final account, which was given on page number 61. Okay, and what we are going to solve today? Today we are just going to cover illustration number 10, that is of Riddhi and Siddhi. See, the partners are Riddhi and Siddhi. Okay, which is given on page number 48 to 50. See, as this is the illustration which has been solved in the book, I will just teach you how they have solved it. Actually, it is a very easy example. Okay, this should not be at the position of 10th number. It should be at the start. Okay, because they have given the complicated illustrations in between and they have kept this last illustration which is very easy. Okay, so this is an easy example, easy illustration. See, now let's go to the illustration number 10, that is the last illustration. See, the trial balance, from the following trial balance of Riddhi and Siddhi, you are required to prepare trading and profit and loss account for the year ended 31st March 2019. Okay, all the things you have to prepare, and balance sheet as on that date after considering the additional information given below. Okay, so the adjustments has been given below. Now, the trial balance has been given in the vertical format. See, this is the vertical format because debit balances and credit balances are shown close to each other and those are shown besides particulars. Okay, so this is given in the vertical format. Okay, how you come to know? Because both columns for debit and credit balances are close to each other and all the items given are one below the other. Okay, those has not been separated, but you can come to know as if you look at the state with respect to each item, then you will come to know to which side it belongs, whether it belongs to debit side or credit side. And apart from that, you have solved so many problems in standard 11 as well as in lesson 1 also. Now, see, what is the simple trick which I have told you? Where they should be recorded? See, the items given on the debit side of the trial balance, they should be recorded either to the trading account debit side or profit and loss account debit side, or they can be assets, or something might be like that. You should be deducted from the sales, that is sales return, okay, which is given on the debit side, then can be recorded to the partner's capital or current account to the debit side, or the same can be deducted from the partner's capital at the liability side. Okay, for the items given on the debit side of the trial balance. Okay, now for the items which are given on the credit side of the trial balance, where they should be recorded? See, they should be recorded to the trading account credit side, or profit and loss account credit side, or can be recorded to the liability, or can be deducted from purchases. Okay, or they can be credited to the partner's capital or current account, or can be added to the partner's capital to the liability side. Okay, so this is the simple trick for recording the items given on the debit and credit side of the trial balance. Now let's move to the adjustments directly. What I had told you that we won't write against the adjustment, we will just remember it. Okay, but then also I have shown, because this is the last illustration, I have shown for only two. See, what is the first adjustment? Closing stock rupees 48,700. Okay, so where the closing stock will be recorded? Trading account credit side and asset. Okay, but there would not be any item against which we can do the marking for recording this closing stock. Okay, that's why I have, for this illustration I have written over here. Okay, this is just for our help, that way it should be recorded. Okay, then outstanding expenses, wages rupees 700 and traveling expenses rupees 200. Now see, these are the outstanding expenses, means the expenses which on the account of wages were not paid till the end of the financial year. Okay, so they should be paid. So where it should be recorded? They should be added to the wages, and where wages are recorded? Trading account debit side. Okay, so we will make 1 mark, 2 marks against wages. One mark for recording at the trading account debit side under wages, and as these are the outstanding, means unpaid wages, so those should be recorded to the liability, because it is a liability, because they haven't paid it. Okay, so the other mark for recording under the liabilities. Similarly, the half part of this adjustment number 2, traveling expenses rupees 200. Again the same. See, traveling expenses has not been paid, which should have been paid. Okay, now let's go to the traveling expenses item given in the particulars. Yes, we found it. Okay, so one marking against traveling expenses, so they should be added. Where it is added? Profit and loss account debit side. Okay, and one marking against to record it to the balance sheet liability side. Okay, see, these wages and travel expenses items are here. Okay, in the particulars, that's why I haven't written over here. Okay, where they should be recorded. But for the closing stock, there is no any item against which we can mark. Okay, so I have written where it should be recorded. I have written mentioned over here. Okay, third adjustment, depreciate land and building by 10% and furniture by 5%. Okay, so this is the depreciation. So what should be done? 1 mark again land and building. Let's move to the land and building. Yes, land and building, 1 mark for deducting its depreciation in fixed assets under the balance sheet asset side, and 1 mark against mentioning the depreciation as an expense under profit and loss account debit side. So 2 marks. Similarly, depreciate furniture by 5%. Similarly for furniture, see, furniture, 1 mark against deducting the depreciation for calculating the written down value of the furniture, 1 mark against recording it in the balance sheet asset side under fixed asset, and this second mark against maintaining this depreciation amount in the profit and loss account debit side. Okay, that is non-cash expense. Okay, so next, that's why I haven't written anything over here, because land and building and furniture are existing over here. Then insurance paid in advance rupees 300. See, this is something which has been paid in advance. Okay, means which was not due for this period. Okay, so what should be done with this? Which was not due for this period, but then also it has been paid, so it should be deducted from that specific item, which is that item insurance. Okay, now let's move to insurance. Okay, 1 mark against insurance. So 300 rupees which were extra paid, okay, for the unexpired period should be deducted from wages, and the same should be recorded as an asset. Okay, under current asset. Next, goods of rupees 3,000 destroyed by fire and insurance company rejected the claim fully. Now see what has been given here. The insurance company has rejected the claim fully. They have rejected. They haven't accepted any part claim. Okay, it means it is entire loss. Okay, so whatever they have loss in file, it is their entire loss. Okay, and what should be done with the entire loss? See, goods rupees 3,000. So goods has gone out. Whatever may be the reason, goods has gone out. So for whatever reason the goods has gone out, it should be recorded to the trading account credit side. Okay, and it is an entire loss. So where the loss is recorded? Profit and loss account debit side. Okay, expenses and losses are recorded to the debit side of the profit and loss account. So it is recorded to the profit and loss account debit side with the entire amount, because insurance company hasn't accepted any part of the claim, neither fully claim. Okay, so it is an entire loss. So against this loss by file, there is no any item against which we can make marking. Okay, that's why I have written over here, so that it will be very easy for you to understand. Okay, now let's move to solve the problem. That is, first what you have to prepare, you have to prepare the trial balance has been given to you, and you have to prepare trading and profit and loss account. Then you have to prepare the partners capital account, and then you have to prepare the balance sheet. Okay, so in this we have to solve the final account. See, as this is the solved problem, I will just explain it to you. Okay, from the following trial balance of Riddhi and Siddhi, you are required to prepare trading and profit and loss account as well as balance sheet. Okay, but on this page I have just shown you the trading account. Okay, now let's move to items one by one. See, where the stock which is given on 1st April 2018, what it is? It is an opening stock. So where it should be recorded? Trading account debit side as to opening stock rupees 48,000 at the outer column. Then capitals are not recorded over here. Then next is purchases. Yes, purchases are recorded, okay, to the debit side of trading account. But let's see whether there are purchases returns given. Yes, purchases returns are given over here. So purchases should be recorded to the inner column. Okay, two purchases amounting to rupees 22,500 we have recorded. Then wages will go to the trading account debit side again, but it has adjustment. Okay, so we'll record it to the inner column. Two wages rupees 800. Okay, then carriage inward, okay, which is the expense which has been incurred for bringing the raw material inside in the factory for manufacturing or trading purpose. Okay, so it is an trading, the expenses is related to the trading account. Okay, so we will record it to the trading account debit side. Carriage inward rupees 1,000 trading account debit side. Okay, but now apart from this, we will check whether there is any item which will go to the trading account. Sundry creditors, bills payable, cash in hand, insurance, sundry debtors, bank overdraft, carriage outward, land and building, furniture, sales. Yes, sales will go to the trading account credit side. Okay, so sales amounted to rupees 47,000. But let's see whether there are sales return. Yes, sales returns are also there. Okay, so we'll record sales to the inner column, buy sales rupees 47,000 to the inner column, as this is the trading account only I am showing here in the books of Riddhi and Siddhi. Okay, for the year ended 31st March 2019. So buy sales rupees 47,000 to the inner column. Okay, and sales return amounting rupees 400. Okay, which will record to the, which will deduct from the sales, that is less sales return rupees 400. So what would be the total sales? So value of the sales 46,600. Okay, now rent, bad debts, RDD, discount, traveling expenses, advertisement, all are not, nothing of them is related to trading account, but purchase returns, right? We have to record the purchase returns also. See, purchase returns, this should be deducted from the purchases. Okay, so purchases less purchase returns amount to rupees 500. Okay, that we have to deduct from purchases. Okay, so the total amount of purchases is rupees 22,000. Okay, now there is one adjustment regarding wages. Okay, but we are closing the trading account now, so we'll record its adjustment regarding the trading account. So what is the adjustment regarding wages? Let's move. That is adjustment number 2. Outstanding expenses, wages rupees 700. So 700 rupee amount of wages were not paid, which were due for that period. So that should be added. Okay, so what should be done? Add outstanding wages rupees 700. Okay, so total wages due for this year were rupees 1500. Okay, now with this we have completed recording all the items against trading account. Okay, now one more thing is there. See, which will go to the trading account, which is given in the adjustment. Goods of rupees 3000 destroyed by fire. Okay, so its adjustment recording will be done to the trading account credit side. So we'll record it as buy goods destroyed by fire rupees 3000. Okay, and our favorite adjustment, that is adjustment number 1, that is closing stock. Okay, so we have to record the closing stock also. One entry of the closing stock, that is 48,700. Okay, so we have to record closing stock amounting to rupees 48,700. Okay, so with this you have completed recording of all the items to the trading account. Okay, now we'll close the trading account. We'll do the total of all these items given on the credit side of the trading account. That will become 98,300. Then we will write the same total 98,300 to the debit side of trading account, and then we will do the total of all the other items given on the trading account debit side. Okay, and we will deduct that total from this total, and we will come across the gross profit amount rupees 25,800. Okay, so we have came across gross profit rupees 25,800, and what we will do of this gross profit, we'll bring it down to the profit and loss account credit side. Okay, now let's move to the profit and loss account. Okay, see, in the books of Riddhi and Siddhi, now profit and loss account. Okay, for the year ended 31st March 2019. See, gross profit was rupees 25,800. We have brought it down by gross profit brought down rupees 25,800. Okay, now we'll move to the items regarding the related to the profit and loss account. Okay, so which is the item? Not this, not carriage inward, not sundry creditors, not bills payable, not cash in hand, insurance. Okay, insurance amount rupees 1,200 has been paid, but there is an adjustment. Let's move to the insurance. First of all, let's record this insurance to the inner column. To insurance rupees 1,200 to the profit and loss account debit side. Okay, then let's move to the adjustment regarding the insurance. What is it? See, insurance paid in advance. Okay, so this is an unexpired insurance. How much of is the unexpired insurance? Rupees 300. So we have to deduct it. Okay, so insurance less prepaid insurance rupees 300. So the total amount of insurance is rupees 900. Okay, its second adjustment we'll do it while recording at the asset. Then, so not sundry debtors, no bank overdraft, no carriage out. Yes, carriage outward. Carriage outward is an expense of related to profit and loss account debit side. Okay, so carriage outward amounting to rupees 900. Okay, we have to record over here. Then rent. Okay, rent amounting rupees 1,800. That also we have to record. See. No, see, this rent has been received. Why? Because it is shown on the credit side. Okay, see, this rent has been shown on the credit side. This rent has been received. So where it should be recorded? It should be recorded to the profit and loss account credit side. This firm, Riddhi and Siddhi, may have given their plot or land on rent to somebody, to some tenant, and they have received 1,800 from that tenant. So it is an income for them. Okay, so where it should be recorded? Revenue income. So it should be recorded to the profit and loss account credit side. Buy rent rupees 1,800. Okay, then no bad debts. Yes, bad debts are recorded to the profit and loss account debit side amounting to rupees 300. Okay, so bad debts. Okay, and RDD is also given rupees 350. But see, a different kind of solving has been shown over here. Why this has been shown? You will come to know. See, there is no any adjustment on sundry debtors, right? Which kinds of adjustments are generally seen on sundry debtors? For example, this new debtor has been arisen of amounting rupees so and so, Mr. ABC XYZ, or again new reserve for doubtful debts at specific percentage. Okay, these two kinds of adjustments are usually seen on debtors, but here in this illustration no any kind of adjustment on debtors is given. Okay, so we don't have, see, this is, I think this could be the first example, first illustration in which there are no marking against bad debts. Why? Because there are no adjustments on sundry debtors, new adjustments are given on sundry debtors. Okay, so we just have to record bad debts and RDD. But if you look at the amount, what do we usually do? We record the bad debts to the profit and loss account debit side and old bad debts, given bad debts in the trial balance, and we deduct the RDD amount, okay, which is given on the trial balance, deduct from the bad debts. But here if you see, this can also be done, but here if you see the bad debts given on the trial balance are rupees amounting to rupees 300, whereas RDD given is more than that. Means whatever they have reserved last year was more than the bad debts of this year, more than the bad debts. Okay, so what does this mean? They are still having more value with bad debts or RDD. Okay, so in this case, what can be done? This can be recorded like this also, in this way, like by RDD old rupees 350 less bad debts new rupees 300. So we can come across the total amount of bad debts for this year, that is 50. Okay, it will go to the plus side. Okay, but what we usually do to the trading account debit side, we write like this: two bad debts, right? Two bad debts, whatever was the amount. For example, the amount was rupees, see, I am showing this because we usually do like this. Okay, bad debts amounting to rupees 300. Okay, bad debts amounting to rupees 300. Okay, and to this bad debt, what do? We add the other adjustments given on the adjustment side. Okay, like adding new bad debts, new RDD. Okay, and we all these adjustments fades to the old bad debts which has been given, and then we come across some value. Okay, but now here there are no any adjustment given here. So what would be the total amount of bad debt? It will remain same, rupees 300. And what do we do? Whatever amount we get here after adding all the entries from the adjustment, we deduct, what do we do? Less old RDD. Okay, but here if we deduct the old RDD, which is amounting to rupees 350, which is more than the bad debts, so what we will get? We will get a negative amount. Okay, we will get a negative amount, rupees 50. Okay, and how do we write the negative amount? With in a bracket. Okay, because it is a negative amount. So if we get a negative amount here, if we would have, if we would have recorded like this, then we could have got minus 50 over here. Okay, this can also be done. Okay, but instead of getting minus 50, what book has shown? Book has shown it recording on the credit side. Why? Because the old RDD is more than the bad debts. Okay, so instead of getting the minus amount, they have shown by recording in this way. Okay, they have record, answer is same. Okay, see, if what you would have, when this would have affected, when you would have taken all the amounts on the debit side of the profit and loss account, then this would have got, you could have deducted it. Okay, otherwise instead of that you can write it in the plus side, and the plus on the opposite side, that is the credit side. All in way it is the same. Okay, so in this way they have recorded done the recording of RDD and bad debts. Okay, now next, what is the next item? See, then traveling expenses. Okay, how much are the traveling expenses? See, traveling expenses are rupees 250, but again there is an, what is there? There is an adjustment. Okay, because two marks are there, so where it should be recorded? Inner column. To traveling expenses rupees 250. Let's move to its adjustment. See what has been given. traveling expenses are also outstanding. How much is the amount? Rupees 200. So 200 we have to add to the traveling expenses. See, traveling expenses, add outstanding rupees 200. Okay, so the total amount of traveling expenses are rupees 450. Its second recording will go to the balance sheet liability side because it is an outstanding, similarly as of wages. Okay, but insurance which is paid in advance, which will go to the asset side of the balance sheet. Okay, now then discount. See, there are two kinds of discounts shown over here. Okay, look properly. This is on the debit side and another amount is given on the credit side. What does this mean? There is discount given also as well as discount received also. Okay, which is discount given? See, discount is a loss. Okay, so this is the loss where we record it to the, which is given on the debit side, where we record it to the profit and loss account debit side, and this is the discount they have received. So this is the gain for them, and where the gains are recorded, gains and incomes, we record to the credit side of the profit and loss account. Okay, so gain, it is recorded to the profit and loss account credit side. Okay, so we record both of the items. To discount rupees 700, that is an expense, and by discount rupees 1000, that is a gain. Okay, so we have recorded these two items. See, in this single entry there are two items to be recorded. Traveling expenses we have recorded, then advertisement expenses. Okay, advertisement expenses are rupees 4150. There is no any adjustment, so we will directly record to advertisement rupees 4150. Okay, now what we still have to record, that is against adjustment number 5th, goods which were destroyed by fire. Okay, so and the insurance company didn't accept any amount of claim, so the goods amounting to rupees 3000 which we destroyed, that is an entire loss. Okay, so where it should be recorded? Profit and loss account debit side. It's first record. See, the first recording of this goods which has been destroyed by fire, we have recorded to the trading account credit side. Now its second recording which was remained, that we have to record as it, that is to loss by fire, the entire amount rupees 3000. Okay, now whatever has been shown over here in the trial balance we have recorded. Now apart from that, what do we record here? Which non-cash expenses? That is depreciation. Okay, now what is given regarding depreciation? See, land, we have to depreciate land and building by 10% and furniture by 5%. Okay, there is no any hidden adjustment like this land and building was purchased on specific date, furniture was purchased on specific date, so it is very easy. See, land and building amounting to rupees 42,500 and we have to charge depreciation by 10%, so it's very simple. Okay, so we record like this. To depreciation on, this heading we will give. Okay, to depreciation on. Okay, and what we will write? Land and building amounting to rupees 4250, that is a 10% of 42,500. Okay, the next depreciation on furniture at the rate of 5%. Okay, so how to calculate it? See, 10% of depreciation on furniture is rupees 3870. Now divided by 2 is equal to 5%. So what is 5% of depreciation on furniture? It is rupees 1935. Okay, so this is the depreciation on furniture. So the total depreciation on land and building and furniture is rupees 6185. Okay, so with this we have recorded depreciation also, and with this we have completed recording of all the items to the profit and loss account debit as well as credit side. So we just have to calculate the net profit now. And how to calculate the net profit? Very simple. Do the total of all the items. See, do the total of all the items given on the credit side of profit and loss account, and we will come across one value, that is rupees 28,650. Okay, so 28,650 is the total of all the items on the credit side of profit and loss account. Okay, that same we have to write over here to come across the profit. We are assuming that there would be the profit because the amounts given here, the value given here are more than the values in the debit side. Okay, so we are assuming that there would be the profit. Then what we will do, we will simply do the total of all these items from here, insurance up to the advertisement expenses, and whatever is the total, that total should be deducted from the final total, that is 28,650, and we will get one amount, that is net profit. And what is the net profit? Rupees 12,365. Okay, so rupees 12,365 is the net profit. And what we have to do of this net profit? See what has been given. How much of capital they have brought? See, they have brought the capital 50,000 and 30,000. But what has they mentioned anything that in which ratio the profit should be distributed? You are required to prepare it. See, they haven't mentioned any ratio on which the profit should be distributed. So what should be done in this case? See, as per the Partnership Act for 1932, when it is silent about the distribution of the profit, what should be done? It should be distributed equally to both of the, or how many are the partners? Among the partners, it should be distributed equally. So 12,365 we have to distribute equally to two partners. That is what we have to do. We have to divide 12,365 divided by 2. Okay. So how we have to record it? To net profit transferred to capital accounts. Okay. In this way we have to record. To net profit transferred to capital accounts of two partners, Riddhi and Siddhi. Amount rupees 6,182.50 paisa actual comes, but we will give 1 rupee extra to Riddhi and 1 lesser rupee to Siddhi. So profit to Riddhi is rupees 6,183 and profit to Siddhi is rupees 6,182 rupees. Okay, that this profit we will carry to their capital accounts. Okay, now let's move ahead. Okay, this is the balance sheet. Okay, see the capitals of Riddhi and Siddhi. Okay, we will record to the balance sheet first, because we are maintaining here by fluctuating capital method, because current account balance has not been given here. Okay, so the capital of Riddhi, this is the balance sheet as on 31st March 2019. Okay, under the liability side we will record the capital of Riddhi rupees 50,000 and capital of Siddhi rupees 30,000. This is capital amount. Okay, now apart from that we will add their net profits to them. Okay, so add net profit of Riddhi rupees 6,183 and add net profit of Siddhi rupees 6,182. Okay, so the total amount of their capitals by fluctuating capital methods are rupees 56,183 for Riddhi and rupees 36,182 for Siddhi. Okay, this first work we have completed. Okay, now let's move to the other items. Okay, which are the other items? See, sundry creditors, which is the first item which you are getting. Okay, from the trial balance. So sundry creditors are recorded to the trade profit balance sheet liability side. Okay, so sundry creditors. Okay, see, when I show you by solving, I always make some heads, and that is the good habit, good practice of making the heads. See, sundry creditors should have recorded under which head? Under current liabilities. Okay, so sundry creditors amounting to rupees 27,600. There is no any adjustment. Then bills payable against current liability 20,000. Okay, bills payable amounting to rupees 20,000. Then cash in hand, current asset rupees 2,850. Okay, cash in hand, current asset rupees 2,850. Then there are sundry debtors. Okay, sundry debtors are recorded to the balance sheet asset side under current asset. Sundry debtors amounting to rupees 32,000. Okay, we have recorded balance sheet asset side. Then bank overdraft. Okay, see, this bank overdraft is again a current liability, so where it should be recorded amounting to 18,000 under current liabilities. Under the liability side, bank overdraft rupees 18,000. What is next? Land and building. See, land and building. Okay, we have to record to the balance sheet asset side under fixed asset. See, we should have given a heading over here. Okay, fixed asset. What is the first item? Land and building amounting to rupees 42,500. And the second effect of the depreciation we have to record, we have to deduct from the assets, that is rupees 4,250, and the total written down value of land and building is rupees 38,250. Next, furniture, again fixed asset rupees 38,700. Furniture rupees 38. See, here you have to make one, you have to repay over here listen properly. You have to repair over here because it is the printing mistake given in the book. You have to repair it as 38,700. Okay, so furniture amounting to rupees 38,700. Book has committed the mistake, okay, while typing the amounts values. Okay, see, furniture rupees 38,700. And what was the depreciation? How much was the depreciation which was charged on furniture at the rate of 5%? It was rupees 1,935 at less depreciation at 5%. Okay, now we will get the final amount, written down amount value of furniture, that is 36,765. Then what is the next item regarding balance sheet? See, there is no any item which is remained which should be recorded to the balance sheet. Okay, so only we will move to the adjustments. See, closing stock, its second effect we have to record to the balance sheet. Asset side under current asset amounting to rupees 48,700. Okay, and we had to record the second effects of the outstanding expenses which were the current liabilities. Okay, wages rupees 700 and traveling expenses rupees 200. Okay, so we recorded to the as outstanding expenses under the head under current liabilities. In the liability side of the balance sheet, wages outstanding amount to rupees 700 and traveling expenses amounted to rupees 200. Okay, so the total outstanding expenses are rupees 900. Okay, with this we can come to know we have recorded all the items given on the trial balance, debit and credit side, as well as we have solved or we have given effect to all the items on the adjustments. Okay, so with this we have recorded all the items. Okay, now will be just the total. So let's do the total of all the items given on the asset side of the balance sheet. It comes rupees 1,58,865. Okay, and we will tally with the total of the amounts given on the liability side of the balance sheet. Okay, we will do the total of all these amounts, and the total also comes as 1,58,865. Okay, so with this the balance sheet which has been given on the in illustration number 10 tallies. Okay, it is getting tallied. Now let's go to today's quiz. This is the quiz of the day 25. Again, this is based on whatever you have learnt in this lecture. See, if goods are destroyed by fire and insurance company has rejected the entire claim. See, insurance company has rejected the entire claim. Okay, they haven't accepted any amount of the claim. Then what should be done with this if the goods has been destroyed by fire in the firm? Where will you record it? What you will record about the loss which you have incurred or suffered due to the destroyed by fire? Where will you record it? The 5 options given are here. Will you record it to the trading account debit side and profit and loss account debit side? Okay, or will you record to the trading account debit side and profit and loss account credit side? Or will you record to the trading account credit side and asset? Or will you record to the trading account credit side and profit and loss account debit side? Or will you record to the profit and loss account debit side and liabilities? 5 options I have given over here, and you have to give the correct answer. Okay, with this we have completed all the illustrations given in the book under the lesson partnership final accounts. Okay, and only one problem which has remained, that is practical problem number 10. Okay, and we will solve it in the next lecture. With that our first lesson will get over. Very good. So what we will learn in our next lecture, that is partnership final accounts, practical problem number 10, that is of Shipra and Manisha. See, the partners are Shipra and Manisha. Okay, which is given on page number 61 to 62. And we will solve that practical problem. Thank you. Stay home, stay safe.